Good morning everyone and welcome along to the Fat Profits Research webinar, the first one for 2015, so welcome back to the new year. It is Wednesday the 14th of January. My name is Kai Lewis, I'm one of the equities analysts on the floor, and joining us this morning for the coverage today will be Greg Smith, the head of research. So let's go ahead and we'll take a look at the outlook for 2015 in this week's report. So we saw that the Australian market is set to push higher. We've got the ASX 200 to hit 6,200 points in 2015, so quite a lofty prediction there, but we're sticking by it. We've got the RBA to cut rates, providing stimulus to the economy, the Aussie dollar to remain weak, and looking to the US, China and Japan for continued economic recovery and growth. So can you hear me there, Greg? Good morning.
Yeah, good morning, Kai, and good morning, everyone. Happy New Year.
So, Greg, we'll take a look at, well, first of all, the Aussie market and where we see that heading in 2015 and the underlying reasons why.
Look, I think obviously the Australian market had a pretty meek performance, it has to be said, in 2014, pretty much not really making any progress if you look at the start versus the end of the year. Now, I think there's a confluence of factors which will likely see the market do a lot better in 2015, and some would say that wouldn't be hard. And I think it's going to really come from a number of quarters. I suppose, look, first and foremost, with respect to Australia, we are a resource-heavy market. Commodities are very important to the market, given the weighting of mining stocks in the index. And commodity prices, for the most part, probably gold being a bit of an exception, it held up pretty well last year, but commodity prices, for the most part, have been under the cosh. Yeah, we saw obviously iron ore in the sort of third going to the fourth quarter being sold down heavily, and then obviously oil sort of overtook the mantle as in terms of the falls that have been seen in energy prices in recent weeks and since OPEC's decision not to cut. So the key thing is going to be how commodities perform this year, and I think very much in terms of your energy sector, in terms of your base commodities, it really is a growing sense of capitulation, I think, and possibly signs that a bottom is not too far away. Key to the resources sector performing is going to be China. What's good for China is good for Australia, good for the resource space. It's a key trading partner. I suppose we're starting to see the data point towards growth stabilising at pretty high levels in our view, around about that 7% mark, which is going to generate ample demand to commodities, commodity prices. And it's quite, I suppose, timely in that yesterday we had the trade data out of China. That was pretty healthy. We had exports up 9.7% against expectations of 6%. We had imports which fell, but they only fell 2.4%. There was expectations for a decline of more than 7%. And what you're starting to see at the moment with China is they're being very savvy. They're topping up commodities at low levels. Record amount of oil imports in December, and this trend is going to accelerate as the year progresses in our view, and that's going to provide positive spin-offs for commodity prices and also mining sector constituents.
Of course, the rate cuts as well that we're anticipating, the RBA cutting rates further. Obviously, money has to flow somewhere, and it's more and more likely to flow to the equities market in order to make a return.